Welcome back to Tip Tuesday, everybody. Awesome to see you, Ryan.
To be here. Hi, everyone.
So, escrow, Ryan, what is this word that we tell our clients all the time? What is it all about? What does it mean? What is actually included in an escrow account?
Yeah, a lot of our first-time home buyers, or even second or third-time buyers, you get questions about escrow accounts, and what they do basically and how they work. We get those questions up front when we're closing on a mortgage. So I'm glad we're taking the time during this Tip Tuesday to address it. So, but when you purchase a home and you have a monthly mortgage, that mortgage payment is broken down in four parts. So number one is the principal. Number two is the interest. Three is taxes, and four is insurance. Now, the principal and interest, that's really, of course, the bulk of your payment. That's one of the main things we always look at. It pays down part of your loan, the principal, that's your borrowing for the home, and it's the monthly interest charge for that loan. That's the bulk of it. Now, the rest of the mortgage is the property taxes and the home insurance. So property taxes, here in Arizona, they are due twice a year. They're on October 1st and March 1st. And your homeowner's insurance policy, it's always due on the anniversary of when you close on your home. So what an escrow account does is it breaks down these yearly taxes and insurance into a monthly payment. So basically taking, the yearly amounts and dividing them by 12, and then we collect this each month with your principal and interest payment. So instead of making one large, tax insurance or really two a year and one really large insurance payment, you pay a little bit each month. And what an escrow account is, it's the account that the mortgage company keeps all that taxes and insurance payments in until those bills come due. So when the tax and insurance bill comes out, it goes to you, but also goes to the mortgage company, and the mortgage company sends the check out and pays that for you. So it really makes life easier. You don't have to focus, you just have to focus actually on your monthly mortgage payment. And the escrow account lets you know that those bills will be paid from your mortgage when they come due, and you don't have to worry about it.
So when buyers get a tax statement in the mail and they have a loan, what happens? They don't have to worry about it?
Yeah. If you have that escrow account, you do have an option to waive it. It's usually only on conventional loans if you're putting 20% down. So not all mortgage programs have the ability to waive this account. If you do waive it, you'd have to pay those on your own. But as long as you know that you do have that escrow account, usually you still get a bill in the mail. They'll send it to you just to let you know what your taxes are looking like. You'll still probably get a notification that your insurance bill is due. But just know you're not the only one getting that. Your mortgage company gets it too, and they'll cover it for you as long as you have that escrow account in place.
Awesome. I know we get tons of questions, tons of calls every time tax season, taxes are due. So it's really great to understand what happens with all of that and where it goes and how it gets paid out. So thank you, Ryan. As always, you guys know how to get a hold of us, and we will see you next week. Have a great Tuesday. Great week. Bye, guys.